Trendlines, UpTrends, and Downtrends, presented by finvids.com, Finance Videos. In this video, we will discuss the attributes and terminology of the trendline support and trendline resistance lines, and show the expected average maximum gain and decline of breaking these support and resistance trend lines. Also, two historical chart examples will be given of the trend lines. What is not included in this video but is included in the content below this video at finvids.com are the traits of trend lines that increase the effectiveness of the buy and sell signals, as well as the suggested price targets. In this video, we will discuss support trend lines. In order to create a trend line in an uptrend, a line is drawn between a minimum of 2 points at the lows. Now, an uptrend is defined by a series of higher lows and higher highs. Now, there is much discussion of whether a trend line requires 3 touches of the low to the trend line in order to be valid. If you wish to learn about this discussion, please see the content below this video at finvids.com. So in summary, a sell signal is triggered when the trendline support is penetrated to the downside. The main sell signal is given when prices break below trendline support. However, some traders suggest buying the third bounce off of support. The average breakout price decline is between 16 to 18%. The average time between trendline touches is approximately 28 days during an uptrend and lasts approximately 137 days before a breakout to the downside. Now, a trendline resistance in a downtrend is drawn at the highs of the trend. So we have 2 highs. The second high is lower than the first. This creates an overhead trendline resistance line. Now here we see a series of lower highs and lower lows. That is the very definition of a downtrend. Now, when prices break above the trendline resistance area, this triggers a buy, and prices should head higher. The main buy signal is triggered when prices close above resistance. However, some traders suggest selling the third bounce off of resistance. Now, Bulkowski offers 3 average breakout price gains depending on the number of touches. As you can see from this slide, the more touches of the trendline resistance, the higher the average maximum gain is. The average time space between trendline touches in a downtrend is approximately 29 days, and the median time before a breakout to the upside is approximately 139 days. Here we have an uptrend trendline example of the S&P 500 exchange traded fund. We have 2 lows connected, creating the uptrend. Then we have a breakout below that uptrend. Now this would be considered a false breakout in hindsight, but would in reality result in a trading loss. However, this false breakout occurred only 31 days into the trend, which is far below Bulkowski's suggestion that the average trend be 137 days. Also note that there were only 2 touches. So what we've learned from the past is that the more touches, the more stronger the pattern becomes. So we have a new support line connecting the 2 lows. Here we have a 3rd touch of the support. So we have 3 touches so far. And then we have a breakout below the support, which triggers a sell signal. So in this example, the support trend line was broken 134 days later, which is very close to the average or median 137-day touches suggested by Bulkowski. Here we have a chart example of downtrends in the Dow Jones Industrial Average Exchange Traded Fund. Now we have a first, which ended up being a false breakout to the upside. Now this occurred only 44 days into the downtrend, which is far below the median of 139 days. And notice that the distance between the peaks creating the temporary resistance trend line were only 11 days and 4 days. This is nowhere the median time spread suggested of 29 days. Now we have a second false breakout that occurred after 110 days, and the spread between the peaks creating the temporary resistance line was 49 days and 19 days. Now we have a final larger overhead resistance line that occurred over a 259-day period, and the peaks were spread out by 125 days and then 76 days. The final breakout was a large price bar that closed near the price bar's high, and a buy signal was triggered, which would have resulted in a very nice gain. Remember that there are 37 other chart examples at finvids.com, as well as 33 candlestick chart patterns at finvids.com.